Good afternoon and welcome to BizTech's Asian Midday Market Watch. It's Tuesday, the 4th of July, and we have Charu Chanana, market strategist from Saxo Markets, as our regular Tuesday guest. Charu, welcome to the show.
Hi, Brian. Happy Tuesday.
Happy Tuesday to you too. Charu, we're going to take a look at how the numbers across the region stack up, and then we'll come back and get your insights. We start with Singapore. The SGX is down 0.18%. We look at Bursa Malaysia then, which is down 0.34%. Shanghai is unchanged. The ASX All Ordinaries is up 0.45% after that rates decision, which we will talk about. The Nikkei 225 is down 0.94%. The Hang Seng is up 0.59%. And rounding up the numbers, we've got the Kospi, which is down 0.28%. Charu, it's a pretty mixed bag in terms of markets. Tell us why.
So I think we started, yesterday this new quarter on quite a positive note here in Asia. I think it's a little bit of a reversal of that. Of course, people try to take in profits and stuff after the strong gains that we saw in Asian markets yesterday. And the liquidity is also quite thin overnight because last night was Canada holiday and then half day in the US. And today is again the US Independence Day holiday as well. So many traders are potentially away.
Now, Charu, then we've just had a rate decision out of the Reserve Bank of Australia, and they've chosen to do nothing. Tell us
Yeah.
the implications of that.
Yeah, so expectations in terms of economic forecasts were a little bit split this time because we've had two back-to-back surprises from the Reserve Bank of Australia where they hiked rates, and I think it is clearly looking like Australia has its path clearly dependent on what's happening on inflation front. April's inflation number was sky high, 6.8%. So they decided to surprise with a 25 basis points rate hike. But the May inflation print has softened considerably from that print of 6.8%. So I think they had the room, they had the flexibility to pause right now. Also, it's expected that July inflation could, go down further because of some tariff cuts as well. So I think as long as they think that inflation will continue to slide lower, come back to its 2 to 3% target range, I think it's time for them to start taking some breathers because remember that, the RBA meets every month. So if they continue hiking every month, that gets a bit too aggressive as well.
And also, the Australian consumer is showing signs of stress because mortgage rates has already risen 4% from the lows, and that's hurting consumers.
That's certainly on the minds of the RBA as well, because the percentage of loans on floating rates in Australia is way higher than, compared to some of the other major economies. So how that impacts these interest rate increases and how they're impacting the consumers is certainly also playing a part in the minds of the RBA policymakers.
Now, Charu, I want to swing to the US. The US ISM manufacturing numbers confirm that inflation is in fact cooling in the US. What will be the impact in the minds of investors and also particularly the Fed moving forward?
Yeah, so last night's this ISM number was actually just a continuation of the trend that we've been seeing in the markets recently, where the Goldilocks situation, as we've been calling it, where inflation is continuing to slow and growth is not looking all that bad. So, the recession concerns are not extremely pronounced enough for the Fed to stop hiking rates at this point. So, of course, the manufacturing headline PMI was weak. We had a 3-year low print of 46, which is the contraction territory. But remember the fact that US economy is obviously being, it is being weighed down by the manufacturing sector, whereas it's the services side which is actually keeping things a little bit more afloat, right? So this slide in the headline PMI itself was not all that surprising. And like I said earlier, it wasn't enough to kind of signal that the Fed has to stop hiking rates now. And the good news on inflation continued. We had the prices paid component at YTD low as well. So I think that's certainly signaling that the tightening that they've done so far is working. And I think the focus really remains, particularly this week, but also more generally for Fed and for US investors on the labor market indicators and how tight that labor market still is, because I think that is the thing that is going to keep inflation still higher than the target and potentially take longer for it to come back to target. And that's why, even though the Fed has paused and might be slowing down the pace of its rate hikes, but it will have to continue to consider hiking rates as long as those labor market pressures remain.
Now, finally, Charu, the electric vehicle penetration rates have gone up globally. Where are the investment opportunities for individual investors? Now, Tesla was obviously the obvious play, but then there's a lot more players in the market like right now, and the Chinese manufacturers have really raced ahead. How do we play this opportunity?
So yeah, absolutely. It's a very interesting market once again after the kind of gains. I think Tesla has seen some 150% gains so far this year. So a lot of positives have actually lined up. There's been tax credits in the US, and the key manufacturers, Tesla, BYD in China, even Rivian, all of them have reported a strong set of numbers for Q2, the number of vehicles that they have delivered. And I think a part is coming from those reduced prices. Tesla has cut prices of its key models over the last 6 months, and that is obviously helping them to kind of penetrate the market better, increase their market share. I think numbers are suggesting that the EV share of the overall US automotive market is already touching about 8% in the first quarter of this year, compared to about 5% last year. So that's a big jump. But certainly, I think Tesla has its share of headwinds as well. You mentioned the competition in China, and the valuation has also become a little bit stretched. So I think rightly so, there are a lot of other players, a lot of ETFs that investors can consider. But I think one big opportunity is also the charging network space. And Tesla, of course, is making some leaps there as well, because Tesla's charging standards are being accepted across the US. A lot of other EV manufacturers are also using that, but still Tesla is the only player there. So I think that is one place where there's a lot of opportunity in different parts of the world. But also, battery metals and battery suppliers like Cattle, which is going to be listed soon in one of the exchanges as well. I think those are some of the other areas which will have a lingering impact from this growing EV penetration globally.
On that note, Charu, thank you very much for your insights. Thanks for coming on the show.
Thank you, Brian. It was such a pleasure.
Now, we've been speaking to Charu Chanana, market strategist from Saxo Markets, on BizTech's Asian Midday Market Watch. I'm Brian Fernandez. This video and podcast will be on our website, www.biztech.asia, as well as our syndication partners, TV stations, radio stations, and websites. Thanks a lot for tuning in.